Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and its 20-week moving average, or the 21-week EMA if you prefer, and the fact that at this point they're somewhat long lost friends. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel, which you can find a link to in the description below. So, if you're new to the market, you might not know what I'm talking about with regards to the 20-week moving average. So let me just quickly remind you. In bull markets, historically, the 20-week is a decent level of support to maintain the integrity of the bull market. We saw that last bull market. Whether you want the 20-week estimate or the 21-week EMA, here we have a band of both of them, so you can more or less see the support they've provided in prior bull markets. And so far this cycle, we have visited a few times, and it took us 3 times. It took us testing it 3 times before we finally held it as support. We failed to hold it here, and we failed to hold it here. And we said whenever we hold it as support, sentiment can change on a dime. And it did. And I mean, I didn't expect to go to 50K so quickly, but sentiment did in fact change on a dime, and you can see just how quickly the entire market turned around. So, the question is, well, is Bitcoin going to go back and test the 20-week SMA or the 21-week EMA? And I think a lot of times, these tests can come when we more or less least expect it. For instance, this test here, it more or less just happened in a day, I believe. Like we just kind of like woke up and it was back it was dropping to 10K, more or less. And then we held 10K as support for about 6 weeks before ultimately getting propelled to much higher levels. Now, we haven't visited it in so long that the 20-week moving average currently is at 25,719, and the 21-week EMA is at 28,539. So we would expect during a bull market, we would expect somewhat periodic tests of the 20-week moving average. This is a fairly historic move. Have we gone this long without testing the 20-week moving average before? We have. In fact, we did it last year. If we were to take a measured move from, say, this point here when we tested the 20-week to then when we tested it again, it was about 175 days, depending on exactly which week how much tolerance you want to give to say what is a test of the 20-week moving average. If we were to go out from the last test, if we said it was here, we've already been out 133 days. So 175 days would be late March, okay? So the general idea there is to say, well, we have done this before. We've been away from the 20-week moving average like this before. However, last time we peaked, we had our short-term peak 91 days after. And here you can see at least our current peak is 133 days after. So this move, after getting, holding the 20-week as support, has been going on a lot longer than the one over here. And yes, it ultimately came back down and tested the 20-week, but it was more or less a slow bleed back to the 20-week, and then once we got to it, we fell down below it. Now, the one thing I should caution people against is the idea that whenever we test the 20-week, whether we test it at 25K, whether we test it at 30K, whether we test it at 35K, I don't know when exactly we're going to test it, but I should caution people that there's no guarantees we hold it as support. Now, we would all like to hold it as support, and there's a decent chance that I'll be trying to hold it as support as well, but there are no guarantees, just in the same way there was no guarantee here that it would hold as support. If you go back and look at the last cycle, we look at, say, the time between tests of the 20-week moving average, we can see that this one was about 98 days. This one was about 70 days, and then so on and so forth. 84 days, 70 days, 105 days, 56 days, and then the final one was 140 days. So I very much want Bitcoin. I would like for it to hold the 20-week moving average. However, we also have to recognize that the longer it goes between tests of the 20-week, you could argue that it's going to be harder for it to hold. In the last cycle, you could make the claim that Bitcoin just systematically went up and then went back and said, okay, we're good. We held the 20-week. And then it went up. Let's just check again. Okay, up. Let's check again. Let's just keep checking to make sure we're maintaining the integrity of the bull market. And then finally, it went on this amazing run where it really didn't test the 20-week for a long period of time. It went well above 100% of its 20-week moving average, close to 200% of its 20-week moving average. If we take a measured move from the peak and the 20-week right here, you can see that the price extended almost 200% from the 20-week moving average. And then ultimately, we did not hold it as support whenever we fell back down. So where we currently are, we're a modest 100%, 95% or so above the 20-week moving average. So we're still not as extended as we were over here. You can see this fairly well with this chart. This is the natural log of the price divided by the 20-week SMA, and you can see that we're not as extended here as we were over here, or we're not even as extended as we were just a few weeks ago when we went to 42K, because the 20-week moving average has moved up so much in such a short period of time. So the general idea is that whenever we test the 20-week moving average, because at this point they're somewhat long lost friends, we want to make sure we've prepared for every possible scenario. Okay? Again, the 20-week right now is at 25,700. It's moving up by 1,000 to 1,500 or so per week, so it's moving up relatively quickly. There's a decent chance that in a week, the 20-week moving average will be at $27,000. And then the 21-week EMA will be over $30,000. So these are moving up quickly. And whenever we do test them, whenever we do, it doesn't mean that it's necessarily the end of the bull market. It just means that we would like to hold them as support to then gain that confidence that we gained here and maybe even go on another run, just like we did for the last market cycle. The alternative that could happen is, and we just want to consider all possibilities, is what if instead of having a systematic test of the 20-week moving average like we did last cycle, what if it looks more like this, where we have a major move, a short-term top, we fail to hold it, we go below, we regroup, and we go back on another run and do something like this. And what if we just keep doing this cycle? Maybe this cycle is more so going to be a tale of just FOMO, maybe retail FOMO on the back of institutional FOMO. Institutions come in, retail investors find out, then they FOMO in, and then things get crazy, they go higher than they probably should, things come back down to earth for a little while, and then you rinse and repeat it. Now, we're not saying that this is going to happen by any means, but it is something to keep in mind, right? This is something to at least keep in mind, that if we were to come back down to the 20-week and we don't hold it, it doesn't mean that Bitcoin can't go to six figures this cycle, right? It doesn't mean that. It could just mean that this cycle, the market structure will be different, and we could go below it for a while, and then we regroup and continue on higher. This is another possibility that I think we should consider. But the reason why the 20-week maintains its importance is because we know that whenever Bitcoin is, a lot of times if it's capitulating to the 20-week moving average, or if it's dropping below the 20-week moving average, Bitcoin will likely outperform most of the rest of the cryptocurrency market. So, for instance, when Bitcoin dropped below here, you would have been better off holding Bitcoin than most of the rest of the cryptocurrency asset class. The same thing here. Now, at the bottom, if you could have timed a lot of entries into altcoins, then those would have actually worked out better so far than Bitcoin's ROI. We know this. However, if you're looking to, say, preserve your wealth while also maintaining a theoretical high potential future return on your investment, holding Bitcoin is obviously, based on historical data, in my opinion, non-financial advice, should be the majority of my portfolio. Again, it's not financial advice. And the reason is because it always protects you. Not only does it continue to give you this amazing upside, but it also protects you more against the downside risk that other cryptocurrencies don't protect you against. Because yes, these other cryptocurrencies can go crazy and ultimately put in higher returns than Bitcoin, but they don't necessarily protect you from the downside risk nearly as much as Bitcoin does. Because if Bitcoin, say, ever drops 40 or 50%, there's a decent chance that altcoins are dropping 60 to 70% or more. So you just need to take that into consideration, because a lot of people say, well, why hold Bitcoin? Well, again, the reason is because it's not about just your return, it's about your risk adjusted return. And one other thing too is a lot of people will measure your theoretical altcoin return as if you bought at the bottom and sold exactly at the top, whereas that's really hard to do with altcoins. It's really hard to do with anything. And with altcoins, there's likely no one in the world that's selling at the exact bottom and or buying at the exact bottom and selling at the exact top, right? That's just likely not going to happen. So with that in mind, I would say with Bitcoin right now, we're at 48,383. There's definitely a decent chance we push higher. At some point this cycle, I imagine we will test the 20-week moving average. We might have a few more gray hairs before that happens. But whenever we do test it, we're going to want to see, okay, how far extended were we from the 20-week moving average? How long did it take to get back to that level? If we break below, recognize that being in Bitcoin historically is better than being too exposed in altcoins. And if we drop below, it does not mean the cycle is over. It just could mean that this cycle looks a lot different than the prior cycle. If you go look at the BLX and look at, say, the weekly chart dating back for the last decade or so, and look at the bull market support band, this cycle, obviously, it looks more akin to 2 cycles ago than this one. And 2 cycles ago, we actually did break below the 20-week moving average for a few weeks. So let's not say that it can't happen, but that if it does happen, it would actually probably present a very nice opportunity. Okay, it would probably present a very nice opportunity in the same way that buying Bitcoin below its 20-week moving average over here, which it doesn't historically spend that much time below. I mean, obviously the bear markets, it's going to be below it, but whenever you get out of this phase of being below the 20-week moving average, you typically just almost never look back. Okay, and especially once you get into the bull market phase of the cycle. So Bitcoin and its 20-week moving average are in fact long lost friends. We don't know when they'll visit each other again, but when they do, we'll see if they hold each other and Bitcoin bounces and continues higher, or if it comes below it and ultimately we have to regroup and continue on before making a run at a much higher target for the price of Bitcoin. Again, I do think that Bitcoin will go to 6 figures this market cycle, but I feel like we still have a long ways to go to get there. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel in the description below. And remember, we do have the premium list sale. You can lock in the lower rate. Check out the description below for that. You get access to the weekly reports, the weekly premium videos, the risk dashboard, the Telegram alerts channel, the Telegram chat room, and the TradingView indicators. So if you're looking to lock in the lower rate, make sure you sign up before the prices go up. We're having the sale since the markets are crazy. There's a lot of new money into the space, and I think it provides a lot of value. Subscribe to the channel at the very least. Let's go for 125,000 subscribers. Give the video a thumbs up. Thank you guys for tuning in. I'll see you next time. Bye.